Hi everyone, hope you're all doing well. Today we're doing a little bit of an update because the stock market is dipping. I'm going to give my thoughts on the stock market, the dip that's happening, and my plan going forward with a certain few stocks. So I'll talk about that all today. So we'll take a look. It's very good this times in with yesterday's video. Yesterday's videos I was saying that what happens if these indexes drop a bit, what will happen to some other stocks that are already down, and I didn't really realise this was going to happen the next day. It's a fluke, but yeah, it's a little bit red. First of all, when it comes to the red days, not bothered. For me, this is it is Black Friday today, and I just feel like the stock market is joining in, and we are getting some fantastic deals on some companies and some stocks. And when I look at some of these stocks and where they're going to be and the financials they're doing and will do in the next 2 to 5 years, I'm looking at some of these stocks right now going, okay, that cash pile that I've been building up, that cash pile that I've got from selling Tesla, that little 25% stake I took out of Tattoo Chef, okay, it's time to get that back in the market, and the cash pile as well. I've already gone through the Tesla and Tattoo Chef money that I got from them sales, but that money's already gone back in the market, and the cash pile that I've been building up. Time to get that involved in the market. So yeah, we're going to cover that all today. Just on a little side note, talk about Black Friday and the stock market joining in. Stake are currently joining in Black Friday at the moment. There's an offer on there that if you join through the link in the description, you get to have $30 of this certain stock when you sign up. So you could take your pick, whether it be Walmart, Target, Apple maybe, if you fancy a little bit of Apple. Yeah, a little bit of a voucher code there, so that when you join and you use the referral code here when you sign up, after you sign up, you will get that in that free share, which is pretty good. And as well as that, you will also, I believe, get the normal free share of either GoPro, Dropbox or Nike as well. So not a bad offer that's going on there. So if you do want to take up that Black Friday offer from Stake, which I think runs to the 3rd of December, link is in the description. But getting onto the stock market, yeah, obviously this morning had a look, and wow, it's a little bit ugly out there. S&P's down 1.6%, Nasdaq's down 1.1%. The Russell, so a lot of us that have the small market cap stocks, it looks like the pain is going to continue, and that's going to be going down up to 3 to 4% today, which is going to be ugly. So do be prepared. It is going to be a bit of a drop today. And the first signs of that was in the UK stock market. The UK stock market opened up today 2% down. And obviously, if you had a few UK stocks, a few of them were on sale. I did take the opportunity. I believe I bought like 4 or 5 UK stocks today, and some stocks that I have not bought for a while as well. So I have been capitalising on it. Now, what's the drop this time for? Obviously, we know there's been a lot of fears out there, but the new addition to the fears that have been really taking the stock market down is this. There's a new variant. So there's been a new variant. This has come from South Africa, and a few people are a little bit worried about this South Africa variant that's come out. So in particular, a lot of the stocks that are volatile to these variants, you think about travel stocks in particular. Obviously those are the ones that are definitely tanking a lot, but in general there's that fear of, okay, if we have more lockdowns, will that mean that we'll have certain stocks that don't perform as well? So yeah, obviously a new variant has spooked a few people. Now, I'm not going to be Matt Whitty on you here and kind of give my thoughts on it and become political on it. My thoughts is just be prepared for the situation. You know, this could be massively overblown. It could get a lot worse. You know, I'm not going to pretend to be like a medical advisor or know exactly what's going to happen here. My situation is just to capitalise on what could be some really opportunities. I think what I'd say on this topic is that we have had plenty of variants before. Every time we have a variant, it always does seem to be the worst variant ever, or this variant's going to cause massive problems. And what has happened since then is that it hasn't made too much difference when we have had previous variants. I think this is like probably the 8th one, I think it is now. So yeah, for me personally, I'm not going to make any rash decisions because of this. You know, the media obviously loves it because it's good for their viewership and sales, and that's also something you got to consider. You've also got to take in consideration what if it is bad and this does mean that we see a lot of these stocks go lower. I'm also considering that, but I'm also considering that the other 7 times that we've had different variants, it hasn't really made a too big of a deal. And the thing is as well, with this new variant, there's not really much understanding of it because it's so new. I think it's not even being proven if it can get past vaccines or anything like that right now. So yeah, until that kind of develops a lot more, it's not something that I'm too worried about. It's obviously something to keep an eye on, but there's a lot of ways that this could still play out yet. So that's what I'm going to say on that. Now, getting on to the stocks point of view, which is what I want to focus on. I don't want to focus on that too much. Stocks in particular, there's a lot of stocks at the moment that I'm looking at and thinking these are very interesting opportunities. So the likes of Boohoo, Boohoo, obviously you guys know I'm a massive bull on Boohoo. I was looking at this one, like a P ratio down at 37. Like I think if this like gets to where it should be, like 100 million profit in the next few years, this is going to be down at like a P ratio of 22. Now you talk about a growth stock that has a clean balance sheet with this much growth. It's like what the, it shouldn't be down here. So an opportunity like this that is at 52 lows for an amazing company like this, I'm a big buyer. Of this one, I'll say that. I won't go much more on that because I want to talk about the stocks I've been buying next week from this week. But you know, I'm not going to waste this opportunity. The really weird thing with Boohoo is that I was looking at Boohoo, and it's one of those stocks that opened up. It's actually positive now, which it should be. Which is a stock that went down today, and I was like, hold on. If we were to have a CV situation, which was, you know, terrible, and we got into lockdown again, what are the stocks that are going to benefit from this? It's going to be Boohoo. You know, Boohoo did amazing when the lockdowns happened. So really, why is Boohoo going down today? Because if this variant is bad, then Boohoo would really benefit from it. So if anything, Boohoo should be up like 5% today. So when this stock was down, I was like, okay, I know what I'm going to do with that. Now, I think a few people finally clocked onto that and gone, okay, now it's moving up in the right direction. But this is just the stock market really not really thinking about it, and that's just something from a short-term point of view. But when I look at Boohoo from a long-term point of view, I still think it's a fantastic company. Like, I'm not looking at Boohoo, I might, you know, in the next few months, if the variant gets bad, you know, I might do okay from it. I am looking at Boohoo from the next 2 to 5 years and thinking this is a pretty good bargain. National Express, not bought this one for a while, but you know, you look at a lot of the travel stocks, these are the ones that you would expect to be down a bit today, but this one in general has just been a stock since April time. Has just really lost a lot of its value. So this is one that I think has been moving in the right direction quite a lot, and today has just topped it off. And I'm looking at a lot of these stocks here that haven't had this drop off for a while. If I just zoom out, you can see here we're like kind of getting to where when we had the CV situation, if you guys remember, obviously we had a massive drop, but we did have that kind of like little bounce up where people go, okay, maybe this isn't going to be too bad. And it's actually back at that like sort of prices near the CV times. Look, it's only in fact, it's a little bit lower than that. So we are kind of getting back to the kind of, you know, May times on some of these stocks. And that's what I'm looking at going, is National Express going to be here in the next 2 to 5 years? Or will we be back in this kind of £4 range or maybe even higher? And that's what I'm kind of looking at. I mean, Card Factory is another one. Card Factory's people worried that, okay, it's got that balance sheet risk. If the shops shut, then obviously this is going to struggle, because that's the biggest risk to it is that the balance sheet, and that if shops get shut down, then obviously this is going to be a massive worry for this one. But once again, I'm looking at Card Factory. You know, back in May time, we were nearly back at £1 and it's just fallen off. Why is it fallen off? You know, in this time, all we've heard from Card Factory is really positive news. The CV situation seems to be getting in a better place. So why are we lower? And today's just topped it off, and I thought, okay, you know, just managing that risk to reward, is this worth a punt? And that's another one. And just on the side note, I went into a Card Factory on Tuesday, which isn't even a busy day, and oh my goodness, it was heaving. So that's another one. Now the US stock market's a little bit different. The US stock market is actually kind of thinking about this compared to the UK ones. You know, the likes of Boohoo, where we saw go down, the US stock market's actually been, okay, stocks like TDoc that's been like absolutely sold off the last kind of, well, I was going to say especially in the last kind of couple of weeks. I mean, look at that. I mean, why does TDoc justify to lose 31% of its value in 1 month? I mean, I'll just leave that to you guys. But especially like, you know, this year, you know, the stocks are just, you know, look at February. You know, this was a $300 stock, and it's down 63%. But a few people are looking at this going, okay, who would benefit actually from this? TDoc, that's actually going up, but relative to today's jump in it, that's still down a huge amount. A stock like Peloton, I think Peloton's a bit different. I think these guys are actually really, I'm not a fan of Peloton, and I think these guys, when you look at some stocks, and go, that's probably deserved to drop. You know, I look at TDoc and I think it was a big valuation, but does it deserve to lose that much? I would argue not. With a Peloton, look at that and go, it probably does, because now it's not really, you know, Peloton is struggling for growth after the CV situation compared to a TDoc that's still growing at a huge amount. And Peloton is once again is a stock that's, you know, having a bounce today on this kind of news, which is interesting. It is interesting to see the stocks that are kind of, you know, moving in that direction after this news. But relative to that, it does show like some of the stocks that are down an absolutely huge amount right now. So going forward, this is my kind of game plan. So number one is what I said earlier, which is buying the dip. I'm buying the dip. I'm looking at certain stocks, this one in particular, that is lost since a stock that is benefited from CV and then has fallen off a cliff. And I'm looking at a drop like 50% and going, is this drop justified? And I'm looking at these certain stocks, and where I'm seeing them opportunities, I am buying the dip. So at the moment, first of all, I am putting that cash in here, buying the dip at the moment in certain stocks, which is the first point I'm doing. The second point is looking for overreactions. I'm looking for stocks that have corrected at the moment, and you look at and going, okay, maybe it deserves to have a 10% pullback, maybe it deserves to have a 20% pullback. But when we start talking 50%, half the value in a year of some of these stocks, I'm trying to find those stocks that have them overreactions. And another thing that I'm trying to do, which is probably not too a boohoo kind of thing, because this can be very volatile, is I'm trying to look for them stocks that don't dip that much. So I'm looking at the likes of PayPal right now, and I'm thinking, okay, if we have this opportunity or this where this happens and this actually shakes the market, as well as buying the stocks that are massively overcorrected, I'm also looking for opportunities where I'm looking at a stock like a big tech company that have been doing fantastic this year, and I'm looking at these stocks and going, okay, what happens if these stocks start pulling back? Am I going to see some big buying opportunities in these big tech? Because one of the things that you guys know I've been doing is I've seen a lot of the opportunities at the moment in the small market caps and growth stocks. That's where a lot of my money's been going this year. I've not really bought too much big tech this year because the valuations are just absolutely crazy. But if I get to the point where in the next kind of few days, few weeks, where I see a lot of these big techs have this opportunity, I've not added a big tech for a while, so if I see one on sale, I will probably take that opportunity. And one of the big ones that stands out is a PayPal at the moment. That's one of the big techs that has sold off massively since July time. You don't normally have big tech that takes 40% dips like this. Arguably, it's still not like a crazy cheap valuation, and that's why I'm holding off for. But I'm also identifying stocks that have an overreaction, but also stocks that are stocks that don't normally have this much of a correction. The third point I'm trying to make here is I don't want to look at these stocks and plan, okay, what happens if this variant happens? What happens if this is really bad? What happens if this lockdown happens? I'm not trying to plan for where I'm going to be in the next kind of 12 months. Quite often, especially right now, is that I'm seeing a market that is negative, and the amount of points I'm seeing making, that stock called Gang is going down and down and down. Oh, it's a terrible stock. I'm not really bothered. I'm not bothered where that stock is in the next 12 months. I'm not bothered really. I'm more staring at the financials and planning where that will be, because in the long term, if that financials keep going up and doing well, that share price will follow it. So rather than planning on what the stock's going to do in the next kind of 12 months, I'm staring at what these companies are going to do in the next 2 to 5 years. And when them stocks do well in the next 2 to 5 years, that's where I'll get the rewards from. So something like a National Express, for example, I'm not worried about what's going to happen in the next kind of 12 months. I'm looking at where this stock's going to be in the next 2 to 5 years. And then when I look at that and I start weighing up, okay, when I look at this dip, for example, is this a really good buying opportunity for what financials this is going to put in the next 2 to 5 years? So I am trying to think from that point of view, a long-term point of view, rather than, okay, what's going to happen in the next week, next month, next 2 months, and that's what I'm trying to think about. And the last point that I'm doing right now with what's going on in the stock market is nibble, nibble, nibble. I am not going into a lot of these stocks and thinking, this stock has massively fallen off, I'm just going to load the boat on this first dip. Because what if it goes lower? What happens if we have what the video said yesterday? What happens if we have the indexes that go down 5%, 10%? What will happen to some of these stocks? Will they go even lower? You look at some of them and you think, surely it doesn't go much lower than this. But it can do. The stock could go lower. And I'm just being careful of that situation, that what happens if we do have a stock market that does now go a little bit lower. So at the moment, I am just, I think the dips are absolutely amazing, and I'm buying a lot of the dips, but I'm not going, okay, this is now fallen off 10%, I'm going all in now, because what happens if it goes down 20%? So I'm just nibbling away a lot of these stocks. So I am buying the dip, and I am getting quite heavy at buying the dip, but at the same time, I'm still keeping plenty of cash on if things do get a little bit worse in the stock market. And as long as I do that, I'll have really good averages in a lot of these stocks, and these stocks that I think I'm buying will do very well in the next 2 to 5 years, which is very similar to the what we had in the CV situation. When the CV situation happened, it was obviously very ugly. every day, just nibbling in at a few stocks. Got to where didn't try time the bottom, but got really good averages, and that was a dip where the whole market dropped 50%. Now it's not happening this time at the moment. You have your certain stocks that are down, 50%, but with these stocks that are going down, the 50% is, I'm looking at these and thinking 2 to 5 years, I'm sure I'll get the rewards. And with the CV one, that was one that you saw the rewards a lot quicker than 2 to 5 years. The likes of Greg's, for example, or the last time National Express, for example, had that sort of dip, you got the rewards. And it's same with this sort of dip that's going on here. I feel like in the next 2 to 5 years we'll see this kind of tick up nicely, and we'll start moving into these sort of right directions where we then talk about £3 stock, £4 stock. So I'm all planning for the long term here and taking all these opportunities, but also being a little bit careful about it by not going absolutely crazy at the moment. But yeah, there's a lot of stocks out there. This morning, like I said, I think I bought about 5 UK stocks. By the time the US market's open, I'll probably buy a few more, and just nibbling away at them. So that's what I'm doing at the moment. That's my game plan. That's what I'm thinking about, and that's my thoughts on a lot of the current situation out there. So I hope that's useful for you guys on the Patreon. There will be exclusive video going up in the next 24 hours. But apart from that, I will see you guys all on Monday. So have a good weekend.